It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Good afternoon. Quarter to 1 p.m. CET, quarter to 12 a.m. London. Piotr here, meaning that we are covering this time pre-New York Open, live only here, Liteforex Global YouTube channel. We are about to cover Bank of England live, so a little bit different meeting than usual. We have around 15 minutes, maybe a little bit less than 15 minutes towards the rate decision. Then we are going to cover Carney press conference as well. So generally should be interesting, especially that the pound is sitting right now at support. We are trying to get back above 21. Before we started 2080, the levels we discussed before been tested, and we are trying to recover, testing the Tokyo low. Risk warning first, as usual, guys. Please bear in mind, trading FX and margin trading, crypto margin carries a high level of risk. May not be suitable for investors. You can sustain a loss of some or all in share investment, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Okay, so overall no change, 9-0 vote. That's what market is expecting. So because of where we are, any kind of the hawkish surprise might push us higher. Still, I'm a bit disappointed with yesterday price action. Was very close to the supply, to my supply level, 2280, 2320. We hit something around 2250. Been thinking that because of the FOMC cut, we are going to see the spike against the dollar. Unfortunately, yesterday it was one-way ticket. That's why during all our meetings yesterday, just the reminder, we had three of them yesterday. I've been talking that it's specific. It was not only end of demand, it was not only FOMC, it was all together, right? So there was a one-way ticket. We do have a bullish breakout on the dollar index. We do have some kind of the continuation during this first day of the August. So yeah, let's see what we can get. We are going to discuss the chart in a moment. First, let's try to connect with Michał, our macro guy. Let's check what he has for us. Please stay with us. Mr. Michał, good afternoon.
Good afternoon, everybody. Good afternoon, Peter.
How you doing?
Piotr, more.
How you doing?
I'm fine. Very good. How are you? How are your trades today? Or no trades?
I just, it's even not worth to mention. I grabbed 6 pips, the whole 6 pips to the short side on the cable. I was trying to grab the latest breakdown. So yeah, and when they started the whole 6p monster 6p.
Yeah, but what lot size? Yeah.
Lot size wise. Yeah,
Wise,
yeah, 001.
Oh.
All right,
Yeah.
Michał, we are short of time. You've got 7 minutes. All over
7.
to you.
Okay. I will just continue our previous talks about the Bank of England. And there are no clear signals that we are going to get the rate cut. I think they are Carney and the whole Bank of England chairmen are clear that they'll just have a stance as other central banks, like wait and see. We will have also the PMIs from the UK, but I think. As we spoke before, there is also not the matter of it's not in the matter of central bank to influence the market. I think they're a little bit in the situation of the Brexit, towards Brexit, when it's getting closer and closer. They're like a little bit of losing credibility. I can say that we were talking about this before, like for the Bank of Japan and ECB, they are talking that they have a lot of tools they can do as appropriate to interfere when the situation will require that action. But as we can see, it's even though the ECB have said that there are no strong reactions to that, and I think it's more about the Brexit and what is going on with Boris Johnson. That after. Right now, he's taking a big trip on the country through Northern Ireland, and he's spoken with the politicians throughout the UK, trying to convince them that it might be a good thing that they are not understanding what the negative and also what the opportunities can no deal Brexit bring. But I think he. He is a little bit. He does underestimate the consequences what no deal Brexit can bring, and I think he's saying that it was also the mandate from the people that they voted for the Brexit, and he also said that he will take the full responsibility and he said, never mind the backstop. So I think we are getting closer and closer and more clearer vision that the no deal Brexit will happen, right? And also in the office, he's started to surround himself with the people which have the same approach as he has, he also in the parliament he's gaining upper hand. Most of the parliament right now is pro no deal Brexit, we can say, and we can see that in the chart, right?
Yeah, that's what I've been thinking. I'm sorry disturbing you for a second.
Yeah, I wanted you to interview.
That's what I agree with you. I have in mind, if you remember our yesterday conversation right ahead of the FOMC, when we were discussing the dollar, and I've mentioned that for a whole afternoon I've been thinking that something is not right? Everyone and his dog was waiting for the cut and for the weekend dollar. And if you remember, we agreed yesterday that it might not going to happen, and it didn't happen.
Yeah.
So here, just 1 second. Here, I think taking into the consideration the speed of the latest move to the downside, market is trying to front run this no deal Brexit. So closer to the October, I'm not gonna be surprised at some point. I don't know if it's going to be 115, 110. I don't know where we are going to be. But once we are going to get the confirmation is a no deal Brexit, So all retail guys are going to start to sell the pound, where the pros are going to take the profit, and we are going to see the higher level on the cable. One more thing here, with weaker cable, there is a danger of the higher inflation. I would be very cautious today trying to sell the pound here in case Carney is going to mention something about the inflation. I still taking into the consideration chart. Either I'm going to try to join the parity again below 2080 towards the parity, or I would like to sell the rally, but I want to see huge rally towards 22, towards yesterday high, or even a little bit higher. Over to you.
Yeah, about the pound USD, and this also concerns the as we can say, a very good strategy, a mastermind, a little bit of a mastermind from Trump's side.
Yeah.
Closer the elections in the US, I think he's gaining what he wanted. The rate cut, the trade deal is right now. The talks with the China ended one more time before even started. He was accusing China for the not buying after the agreement of the agricultural products from US. Now the China is accusing US for the interfering in the Hong Kong in the situation what is going on in Hong Kong, that we have strikes, and yes, and they are clearly saying that some of the politicians were in the Hong Kong a day or 2 days before it happened, and they are giving the example from the Ukraine Maidan. It happened also, right? So I don't know. It's like pushing the line, but it seems like he will get what he wants. He will.
But
right
yesterday
now,
he didn't. Yesterday he didn't. The dollar was stronger and stocks moved down strongly.
Yes, but if he's in his mind, I think in his mind right now is to keep the no deal with China for a short or mid short term of time, and after that he will sooner or later get the deal in the year of the U.S. election, and the stocks will rise again.
Yeah, you're right. You're right. That's my way of thinking as well. Michał, thank you very much. We are approaching Bank of England rate decision. It was the pleasure to have you here today. I'm going to go through a few charts, and good luck during the New York session.
Yes, same to you. And I think next time we will have a little bit more time. I see that it's going so fast.
Yeah, time is flying.
Enough time to talk about fully about the topic. Okay.
All the best, Michał. Take care. Goodbye.
Bye bye.
Okay, guys, I'm trying to rebuild the view. We are about to watch cable and euro pound. In case of the stronger pound, probably I'm going to trade this bear flag on the euro pound. In case of the weaker pound, probably I'm going to join the party on the cable towards psychological 120 level. Good luck all. I'm not gonna chase the market right after the decision. Let's check. Let's have a look what we have, and then let's make the decision. On the euro pound, I wanna see the attempt to break lower, higher, and then real move to the downside. Good luck, guys. pound trying to the downside. The shame here on euro pound that we didn't wait, we did, I'm sorry guys, looks like we did. So we were trying downside, so I want to see the rally stop hand above the top of that channel, yellow supply zone. That's where I'm interested to the downside from the euro pound perspective. Cable, if I'm not mistaken, and this megaphone is might be also on the thing like this. And it's a logical level 2080 we discussed. Not the megaphone was born today, but 2080 we discussed, as you can see, two green lines we discussed well before, and now it's not coincidence that we are trying to trade like this, so trying to hold this support here. So as market, we got what market was expecting, unchanged, 0.75 vote, 90 leaves asset purchase unchanged. So as market, we got exactly what market was expecting. So it looks like we might try to hold these levels towards the Carney press conference. Because it's unusual that on the pound, after the rate decision, we have 14 pips move, right? Even less on the euro pound. It's not something usual. So looks like I would prefer 2280, 2320, top of that megaphone as a selling opportunity. But in case of the rally, the first one may arise around Monday low, 2220, right? So trying to trade this over under, comparing what we've seen yesterday and day before. From the very short-term perspective, we are on the cable. We are testing this breakdown level over here. And in case of the move higher, that's gonna be the first possible demand, right? And we might see Tokyo high in play then. As you can see, nothing is accidentally happening here. Algo are well programmed. So, okay, another attempt to go lower on this euro pound. It looks like, yeah, it's better right now. So without the stop hand to the upside, come on guys, don't do this to me. Don't do that to me. This type of the right now it's too easy to trade this bear flag, right? It has to be a little bit more complicated. It has to be a little bit more complicated. That's the full zone. 91.50. Maybe a little bit below. Yeah, something around 91.50. But if that's the case, we might see another lower low on the cable. High random name. We are sitting at support, right, based on the daily chart. That's what we discussed some time ago. That's what we have based on the price action we've seen at the very beginning 2017 February. So we are sitting right here at support. So I'm not surprised that it's not that easy to try to break it to the downside, right? Of course, these levels are not the reason to try to catch this falling knife. I've been trying to catch the falling knife around 23, but that was my last time, right? Since then, I'm looking for a retest of these levels of 23 and to trying to go lower towards 118 maybe. Here on this 15-minute chart, we are creating very similar situation on what we have on a daily on euro-dollar tweezer bottom. So a little bit of the relief rally in case this tweezer bottom holds might be the case, meaning this bear flag, it's, yeah, we are going to see the continuation. So no, it looks like they don't want to test 91.50. Looks like they are reacting right at the open of the yesterday, right? So here looks like we are reacting right at the open. So that was the supply they took into consideration. I think if I would be short, I wouldn't see move back and close above on the hourly chart, for example, to close above Tokyo low, right? Then we might see move back. It would be good to make the measure of the Tokyo session. So let's try to do that. 50%, right? We saw the bounce break. So 50% Tokyo stops above, so we might see a little bit relief rally. And when we switch to 15 minutes, that would be this manipulation point to the downside we've seen ahead of the Bank of England. So yeah, we don't want to see move back and close above the Tokyo low, because we broke through this Tokyo low trying to hold. But on the 5-minute chart, we do have latest move to the downside. So the latest weakness we have here. And those two lower shadows but that's the 5-minute chart, so it's completely different story. But those two lower shadows, that might be the invitation, right, for buyers. So the sellers are going to have a liquidity here, and we will see. But we need to move and close hourly chart below 80, and then we should speed it up towards the figure. The thing is that we do have US ISM manufacturing, if I'm not mistaken. Manufacturing. So let me check, because we are about to have a Carney. Let me check if I can have the link. In the meantime, here you have, guys, statement. And quarterly inflation report is here. And I'm checking where we can see Mr. Carney press conference, probably somewhere on YouTube. So in case, I still believe we might see Euro Pound rally ahead of the lower levels. So in that case, that should be another attempt to go lower on the cable. And that's the link to the Carney press conference. So 21, 20, 21.25 short term, the line in the sand, I would say random, but that's my opinion only. But it's incredible for the pound to stay in such a tight range after the Bank of England rate decision. In the meantime, as we have a few minutes ahead of the break and then the press conference, dollar yen, that's what I've been talking about this morning. And that's what I've been talking yesterday. The only dollar pair I didn't like, right? And looks like we had this spike higher during the Tokyo session, stop hunt, and we are pulling back. Nasdaq 7,880 max. Just a reminder, 7,900, 7,920 might be supply. So the things might get very interesting on the dollar yen and on the indices as well. Especially that the end of the month was not good for US indices. Also, we discussed this morning. So in case you haven't watched, I encourage you to guys to visit archive section on the Liteforex Global YouTube channel and check today's morning meeting. Let's get back. The five minutes trapped a bit, right, in between supply around 2120, 2125, and between this latest weakness here around 2095. Those two lower shadows I discussed and those two upper shadows a little. I'm really surprised that we are still inside that range. It looks like at least the big guys, they want to see what kind of the tie Carney is going to have today. So maybe that's gonna be, the idea for the direction. I'm joking because there was everything started, as far as I remember, everything started with Mr. Greenspan, the former FOMC, the former Fed chair, a long time ago, when the market was trying to figure it out what's going to happen during the FOMC. There was some jokes that depends on what kind of the tie he has, what kind of the suit, and stuff like this. So yeah, I still remember these jokes. I've been trying to check if I'm connected, if I have a feed, right? But yeah, it looks like the platform is working, and I've checked on 2 different platforms, and everywhere same situation on the cable. So guys, I think it's a good time. We have 10 minutes to the Carney press conference. So let's have a short break. Bar is open. Coffee, tea, mineral water, whatever you want, but non-alcoholic drinks only, too early. So enjoy the break. Charts are staying here, and I'll be back within the next 8-10 minutes.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Has remained soft, and the perceived likelihood of a no-deal Brexit has increased significantly. These developments have led to a substantial decline in market.
Okay, guys, we are about to start the press conference. I'm going to listen, but one thing in regards to the dollar yen, where we are right now, Monday low. If we are about to stop and see the rally, I think that's in between here and the bottom of that candle. So we are talking about the 8 pips zone. That's the last line in defense here, in my opinion, on the dollar yen. Let's get back to the pound and to Mr. Carney.
The committee will always act to achieve the 2% inflation target in a sustainable manner. Starting with developments in the global outlook, with the ink barely dry on our May inflation report, the US-China trade dispute deepened. And more generally, the rationales...
So it's all about US-China, right, Mr. Carney?
more pervasive, persistent, and damaging than previously expected. There are already signs that trade actions are having larger effects than previously anticipated on global business confidence and investment spending. For example, the global manufacturing PMI fell to its lowest level since October 2012. The latest indications and indicators suggest that global growth is holding steady.
If it's going to be too loudly, if it's too noisy for you, let me know, guys.
The quality of that growth has also deteriorated, with the growth rate of business investment in the G7 cut almost in half since its peak in late 2017. Global price pressures remain subdued, with headline and core inflation below target in all major advanced economies. In response to the softer outlooks for global demand and inflation, the expected paths of policy interest rates in advanced economies have shifted sharply lower. Expectations of easier monetary policy are supporting global financial conditions in turn. U.S. 10-year yields are near 2-year lows, 10-year gilt yields are at their lowest in 3 years, and German 10-year Bund yields are their lowest ever. Around $14 trillion of global investment-grade debt is now trading at negative yields. In the MPC's latest projections, these more accommodative financial conditions offset the drags from trade headwinds, although global growth is now expected to return to potential rates more slowly than in May. UK financial conditions have also loosened since May in response to both global developments and the growing weight financial market participants are placing on the possibility of no deal. Sterling's now 6% lower than at the time of the May report. UK-focused equity prices have fallen by about 5%, and gilt yields have dropped by around half a percentage point. The market yield curve underlying the MPC's latest projections falls to 0.5% over the coming year and ends the forecast period at 0.6%, or around 40 basis points lower than in the May forecast. Turning to the UK outlook, as well as their impact on financial markets, Brexit developments are making UK GDP growth more volatile than usual owing to stock building and auto plant shutdowns. Looking through these temporary factors, the underlying pace of growth has slowed to below potential rates as a result of a weaker global demand and more entrenched uncertainty about Brexit amongst UK companies.
Uncertainty in regards to the Brexit.
Decision-maker panel now expects the future relationship with the EU to be resolved this year, down from almost half in January. 1/3 of our agents' business contacts report being more uncertain about the economic outlook now than they were ahead of the extension of Article 50 in April, while only 1 in 10 have become more certain. These developments have already led to marked weakness in UK business investment since the referendum. Investment intentions point to further contractions in the second quarter and third quarter this year, and the MPC now expects business investment to pick up more slowly over the course of the next year. By contrast, the labor market remains tight, with employment at record highs and unemployment at 44-year lows, and pay growth strengthening as a result. Supported by the resilient labor market, households' confidence in their personal financial conditions is holding up, with spending rising broadly in line with real incomes.
Spending rising in line with the income, so that's a little bit positive.
And households' concern about the general economic situation continue to restrain housing market activity. Overall, the MPC...
But uncertainty has influenced housing market.
Over the course of the coming year, with Brexit-related uncertainties and softer external environment both weighing on spending. As a consequence, a margin of excess supply persists over the next year. UK inflation is currently bang on our 2% target. Domestic inflationary pressures have strengthened as wage growth has picked up, with growth in unit labor costs currently around target consistent rates, although core services inflation remains somewhat subdued due to temporary factors. Headline inflation will probably dip around 0.5 percentage point below target in coming months, owing to cuts into energy bills, but core inflation should remain relatively stable at rates only a little below 2%. Looking forward, increased uncertainty about the outlook suggests that the UK economy could follow a wide range of paths over coming years, depending most importantly, of course, on the nature of EU withdrawal. Consider, as financial markets increasingly have, the prospects for no deal. The bank has been working since the referendum to ensure that the financial system is ready for Brexit, whatever form it takes. In order to continue to serve their customers, whatever happens, UK banks are now both exceptionally well capitalized.
UK banks are so well capitalized.
Domestic and EU authorities, our contingency planning with both domestic and EU authorities is mitigating possible risk to disruption of cross-border financial services. And most fundamentally, our institutional framework is robust. The bank has clear objectives, we have operational independence, all the necessary tools, and the needed resolve to deliver our monetary and financial stability remits. But financial stability is not the same as market stability. In the event of no deal, no transition Brexit, sterling would likely fall, the risk premiums on UK assets would rise, and volatility would spike higher. Similarly, preparations by governments and businesses for no deal are vital to reduce the potentially damaging transition costs to a WTO relationship with the EU. But those preparations cannot eliminate the fundamental economic adjustments to a new trading relationship that a no-deal Brexit would entail. In the event of no deal, it's probable that CPI inflation would rise and GDP growth would slow. For example, our agent surveys of businesses finds that most companies now report that they're largely ready for no deal. However, just a fifth describe themselves as fully ready, while 3/4 of respondents say they were, I quote, as ready as they can be. And despite greater preparedness, businesses...
He's quoting right now the surveys in relation to how the UK businesses are prepared for a no-deal Brexit. Doesn't sound good.
Upward pressure on inflation, from the likely fall in
trying to read between the lines.
In supply capacity, with the downward pressure on inflation from any reduction in demand. It's of course the government's intention to achieve an agreement with the EU. Therefore, as in previous reports and consistent with our general approach to condition forecasts on government policy, The MPC continues to assume a smooth transition to the average of a range of possible outcomes for the UK's eventual trading relationship with the EU.
If you're watching dollar yen, we discussed a minute ago,
The UK's future
trying to hold this zone.
economy emerge, business investment recovers, and household spending picks up, broadly in line with robust real income growth. Owing to much easier financial conditions, the acceleration in growth is stronger than we had projected in May. With potential supply growth expected to remain...
I'm going to use that opportunity that nothing is going on with the pound to invite you tomorrow 8 a.m. as usual. Every day, Monday to Friday, we are covering pre-London Open live here on Liteforex Global YouTube channel. And we are going to cover tomorrow also non-farm payrolls as well here, Liteforex Global YouTube channel. 15 minutes ahead of the event, we are about to start our meeting. And it's gonna be my pleasure if you are going to join us tomorrow.
Including the substantial weight market participants are placing on the possibility of no deal. And that's inconsistent with the committee's...
Hi Rizwan Sabri, correct me if my pronunciation is not good. There is no reason to do anything with pound right now. Basically, we moved 12 pips after the rate decision, right? So overall, what we discussed right now, based on the cable, from the daily chart perspective, as you can see, we have two green lines, meaning we have some kind of the support around 2080 on the cable, and we discussed this quite some time ago already, right? So we finally hit that support. On the hourly chart, we have some kind of the, I'm calling this jumper, right? When you are connecting lower lows and you have this kind of the line, falling trend line, where you're connecting the lows, right? It might be some kind of the jumper. And that's logical level where someone is taking the profit or some guys are trying to buy, but I would be very careful trying to catch falling knife here. Then we switch to 15-minute chart, and here we figured out the latest weakness, right? So the supply is around current level 2120, 2125, right? And as long as we are below that level, there is a chance we will retest the low. In case of the move higher, in case of the move above 2125, meaning that the latest move to the downside we can call as this move to the downside we can call as a manipulation, right? Then in case of the break to the upside, we might retest Tokyo high. So right now there is no reason to do anything right now, unless you are short. You might want to try to take partial profit. If you are long, you have some tight stop just to avoid the situation. We are moving lower. So really nothing to do right now. I have a plan to join the party to the downside in case of the move below 2080, or I want to see big rally towards 2280 above yesterday high. If you were watching yesterday, we had 3 meetings yesterday, and there was a rally on the cable, and unfortunately missed something around 25-30 pips from the selling zone. So trying to avoid the troubles right now, watching carefully. In case of the buying pound, Euro pound might be the solution, but there is a bear flag, and usual bear flag described in the book, you have that if there is a break, so that's the creation of the flag, then we are moving inside the flag and we are breaking down. That's what you can find in the book, right? But you are not going to find in the book that very often first attempt to the break is the false one. We have the rally, and then the second attempt is the correct one. So that's what we do here. We are learning, right? We are trying to learn something new, each of us, trying to avoid the troubles. Adi, what next? I really don't know. I cannot move the market. If I would have enough money to push the market either way, upside, downside, then probably I would tell you, right? In case I can't move the market, I'm trying not to be the front runner. Just guys, check last 45 minutes on cable.
For government in negotiations with their European partners.
If we didn't have the information that it was the Bank of England rate decision, that's the 15-minute chart, last three candles. You would never ever say we are after the rate decision during the Carney press conference right now. I would love to do something, right? Because you join me, so we are here watching the market, and I would love to try to have a good call, right? But I'm not gonna force myself to tell you long or short if there is a no clear situation right now. Right? So we have to understand that sometimes being without the position is also position.
What the market is doing
When there is a right time, yesterday, perfect call yesterday. If you've been here during the afternoon meeting with Canadian GDP, we called euro-dollar short correctly. I didn't take it because risk reward, it was not in my favor, but the call was correct. There was a possibility to be short well in advance, as well as intraday long of USD cut. We drew the zones, everything was fine. But if there is no movement, nothing we can do, we have to wait.
Not the majority way.
Why not triangle in flag?
We look at what's most likely.
Now!
We look at government policy.
Looks like the bears are disappointed and trying to take the profit, so we are breaking to testing 25.
Clear message around in the event of moving towards a deal, we think that the way the economy will perform will be consistent with some modest adjustment.
I can't see the triangle here, to be honest with you.
And it's important that households and businesses understand that. And actually, there's reporting in this report of something called the NMG survey of thousands of people across the country. That's what they.
What I like to see.
It is more complicated.
Most probably you haven't seen. In June we held 3 educational webinars. All of them are recorded and available on the archive section here on Liteforex Global channel. What I like with the trend lines, usually I like very much the horizontal levels. That's the key. And sometimes I like to watch the dynamic trend lines, rising trend line, falling trend line, in case when we have the first attempt to break to the downside in case of the rising trend line with quick reverse, right? That's what very often happen when you are trying to when there is an attempt to break first time to the downside. So the same works with the flags. The same works with the flags. And if you have a time, if you have and you like what we do, watch every day. There are gonna be plenty of different setups. And we are here to learn. We are here to learn, to take the responsibility of our own when we are trying to trade. Also, what we're trying to learn is to avoid to be, I'm calling this front runner. If you cannot move the market, don't even try. And of course, how many traders? That many different strategies, right? So I may try to share with you something you don't know. If you have something you can share with us, we are here to, that's why we have this chat, to talk to each other, right?
Ed Conway from Sky News. Governor, it's your last set of major forecasts ahead of that October deadline, and a lot of people will be looking towards you. And
dollar yen again below 90.
What to expect, how to prepare for a possible no-deal Brexit. So what's your advice?
Short-term stops are done for sure.
What should they expect?
So those 2 lower shadows on this 5-minute chart, when we were trying to hold
Let me reiterate that again. We obviously don't.
above this latest weakness, right? We saw the weakness here and we are trying to hold. So this 5-minute chart to work out, at least with the stops for now, but 5-minute chart, you know.
But in terms of preparation,
The thing is that we are at the very logical support level based on the higher time frame. So some aggressive bounces possible here.
that the financial system
Possible. You don't wanna catch the falling knife.
years, both in terms of what we can do, but also
If there is gonna be the setup, I'm going to enter.
no deal situation, broad brush, is one in which sterling is likely to be lower.
If there are going to be setup for me,
Inflation is likely to be higher.
I'm usually entering the position.
And
If you haven't seen this before,
the
so just telling you that how it works.
many factors, including, by the way, what no deal
I would love to trade every 2-5 minutes to have the good setup and good trade.
different people
But unfortunately,
when they talk about
doesn't work that way, at least for me.
we do our contingency planning at the Bank of England. No deal means no deal. No deal means there's no side arrangements. No deal means that the trading relationship instantly goes to WTO tariffs and product standards, and then it has the associated economic effects. So in terms of households and businesses, but I would say broadly this, which is that UK households, I said a moment ago, are acting prudently. They're not borrowing a lot. They're spending out of their real income.
So we are approaching New York Open right now.
Going into
So let's have a look where we had New York Open yesterday to check the gap between the sessions.
are growing the fastest since before the crisis, since 2008, and inflation's bang on target. So real incomes are growing.
So 21.75. That might be at some point might be attempt to close the gap, right?
Approach to take.
In between the entry. Sorry. I'm sorry. That was yesterday here.
Just to clarify some of the answers.
And the close
There are people in downward
21.50. I'm sorry, 21.50. So that might be attempt to hit this Tokyo high and to close the gap between the New York sessions only.
It depends. It absolutely depends on the impact. First,
I've
there's
been
no need
explaining this before. For me, most probably for you guys,
to, add,
we have this daily chart and that's our session, 1 day, 24 hours, right?
that's first.
But if you have a possibility to ask some guys working in a bank, how does it look from their perspective, especially inside the international banks,
Order
it works a little bit different, right? For them, it's 8 a.m. or 8:30 in New York,
because it's all
4 p.m. they are done, and that's their day, right? So we were doing, or as far as I remember, I've been encouraging you to do this type of the training, right? To work with the daily candle, but based on the separate session, right? So trying to create the daily candle based only on the Tokyo session, trying to create daily candle based only on New York session, or trying to create the daily candle based on London session.
and then there is supply destruction.
Try to
Activities
do this stuff and check. Maybe this type of the things is going to work for you. Then you will discover that sometimes we were thinking why we saw this spike. And very often it's just simply closing the gap between what happened day before but during the particular session.
because of the exchange rate, because of some of the tariffs that come in, because of some loss of supply, whether those inflationary pressures, whether we can look through those, extend the horizon, and provide support for the economy as it adjusts. Now, what we have said, and I've reiterated in my opening remarks, is we will do
If there is no setup for me, there is no trade for me.
jobs and activity, but there are limits to what we can do. Ultimately, this is about our best contribution is returning inflation sustainably in that 2% target. And it is an unusual circumstance to have a major supply shock, and that was not the case after the referendum. It was only a prospective supply shock, not an actual one. In no deal, it would be an actual one.
So in case, for example, of this euro pound, right? What I would like to see, and that's the setup. If I'm going to get that setup, I'm going to make the trade. I want to see there was an attempt to break through this flag to the downside, right? And we are still holding around or inside the channel. I want to see the rally towards my selling zone, and the yellow box is my selling zone.
Is he right? Is he right?
So I'm looking to sell euro pound on rally towards 91.50, 91.55 with stop above 70, so it's gonna be around 50 pips stop, and I want to take the full advantage of this flag, meaning that I'm going to target, that's gonna be my target.
As a crystallization of a bad economic outcome.
In that case, I secure the initial